In this video, guys, we're going to look at what is a pump and dump. Stick around. Hey traders, warm welcome to you. So you might have heard this phrase, a pump and dump, and it was kind of something that was very, very prevalent maybe a decade or two ago, probably 2 decades ago really, when newsletters were around. So stock newsletters would have a big email list. They'd send out an email that would say, hey, this stock is doing this, this and this, and it'd create hype around the stock. And you know, there was it's actually a criminal offense now to pump and dump when you're pumping a stock based on false information. Now, we've got to be careful how we define this, because literally sharing a stock idea and saying, hey, this is my idea, this is why I'm buying the stock, this is what I believe to be true, you know, that's just sharing a stock idea. Hyping up a stock and talking about things that are completely not true. Hey, there's a deal going to be done here. Hey, the CEO is about to sign this. Hey, there's going to be a takeover. You know, that is false information, and that's highly illegal. Now, this kind of thing went on loads and loads and loads, and it still goes on a little bit, not so much because it's a criminal offense now, and they put a lot of these guys in jail and all this kind of stuff. But a lot of people are saying, hey, what about this GME? What about, you know, KOSS? What about all these things? These pump and dumps. So let's talk about the mechanism of pump and dump, and maybe we'll address that at the end of the video. So pump and dump consists of 2 phases, the pump phase and the dump phase. And the idea is that you get a consortium of shareholders, or not shareholders, who say, hey, I want to increase the value of this stock and sell this stock when it's at highs. I want to be able to create money by either buying the stock fresh or having it already, pumping it, giving the stock more value, making the price go higher, and then selling that stock at highs to capitalize on that increase in price. And what would happen is very often either be you know, shareholders or a company, a group of people would say, hey, send out this newsletter, try and get your audience to buy this stock, and we'll give you some shares. And you know, they would create some hype around this. A newsletter would go around, create a lot of hype. It would normally be quite an illiquid share, which would cause quite a rise, and they'd be to sell into it. They'd be made to make a few £1,000,000, few $1 million, and walk away, and the people will be left holding the bag. So let's look at the phases of it. So the first phase is the pump phase. This is where you've got to have hype, you've got to have momentum, you've got to have a good story, you've got to have a leader, you've got to have audience. So you've got to create hype around it. You've got to have an audience to create that hype, i.e. a newsletter or a bulletin board or forum or something where you've got eyeballs on you. So you say, hey, this stock is great. There's some sort of news around it. You've got to be a good storyteller and say, hey, you know what? This is the kind of thing they're doing. They're revolutionizing this, and it's going to be this, and they've got a new contract coming up with the government and all this kind of stuff, and creating some kind of fluff around it, creating a good story for why the stock should be significantly higher. And they usually say stuff like, you know, let's say it's trading at $1 right now. They'll say stuff that makes it sound like it could be worth $500, so easily. And they think, well, even, and then the idea is that the unsuspecting people, traders go, well, even if it's worth 50, so yeah, so 50 times my return, great. And so the hype, the momentum, a good story, a leader, a charismatic leader, or someone who is articulate and can make sense when they tell the story and the logical argument, and then in your audience, and that's when you create this kind of phase. So this zone here is basically it's sitting there. It's a true valuation, if you like. And all of a sudden, the kind of phase 1 comes. And phase 1 normally comes before the actual sharing with the audience. So they might go, okay, a liquid stock, they might put some money into it to push the price up. You know, a smaller liquid stock, push the price up to create a little bit of hype and a little bit of movement already, because what you want to do is you want to create FOMO. So they then send out a newsletter, they send out to the audience, they say to everyone, hey, this stock's about to rip for this and this reasons. People check it out and see it's already up maybe 100%. This company or this newsletter is saying it could be up, you know, 3,000%. And then what we do now is they start to create more hype, they start to create more momentum, they start to get it going. And this is when you're in phase 2. This is the proper full pump zone, when this word is spreading, everyone's buying it. You know, it's illiquid, no one's selling it. They've started the ignition going, they've kind of moved up a little bit, they then put the hype button in, the momentum's going, they've got a good story behind it, as a charismatic leader, they've got the audience, great, it's going, people are buying, and we get to this point here. And normally throughout this whole thing, little dips, you know, there'll be people saying, stay strong, you know, keep buying it, I'm adding more, and other people start taking that up and start getting committed to it, and it'll kind of run on its own snowball effect, where everyone's pumping behind it, everyone's committed now, everyone's put money into it. The guys who bought it down here quite happily sitting there waiting, and then when they feel like it's the kind of crescendo of it, the euphoria's died off, the flow of information, like the speed of people posting on the bulletin board, or the clicks on the email, or the buying's locked off, these guys will then sell. And this could be, $30 or something, or $50, $100, $200, whatever. They then will sell that stock, and then it becomes an art of them trying to dump the stock whilst not creating the price. So then the pump comes out again. So they're kind of selling the stock into this here, and then another newsletter comes out and says, hey, we think it's going higher. We've revised our things, blah blah blah. Now's a great time to buy. More hype, more pump, more story. That keeps the bid coming in, keeps the buyers coming in. Meanwhile, all these guys are selling into that bid. The price isn't going anywhere because they're just dumping. This is the dump phase now, and then dump phase number 3, bang. Eventually it just collapses because all the initial people who were manipulating the stock are out, and all the retail traders, all the people who got sucked into the good story and all this kind of stuff, who hadn't come out here and kind of taken a chunk, who had been buying up here, are now caught holding the bag. And it craters down, and there's liquidating. It's a one-way street, and it's back down to where it was. By the way, guys, you also get in phase 4 this kind of little pop off the lows, because people think, oh, it's come down so much. It's value here. It was up at $30 before. Now it's value, and it's just kind of residual buying where people feel like they've missed out. And eventually that kind of peters out and it goes down. And it's the end of the game. And you need, for the dump, you need the high price. You need the last of boardies, keep hype going, and they're selling into the latecomers, and then people are making money. So this was how the classic pump and dump illegal scheme worked. It was a case of creating that false information, creating that false hype, creating a false bid, starting it off, starting the ball rolling, getting people into it, pushing out to as many people as possible, telling a good story, making up some stuff. The price would rise, and those people would be able to get out a handsome profit. The thing would collapse, and it would basically be transferring wealth from the people who were buying up here to the people who are here, and it's down and off again. Now, I guess the question is, what is a pump and dump? Is a group of people buying something a pump and dump? Well, no, not specifically. The kind of fine line comes when people are falsifying information or telling complete lies to get the stock up, or if they're doing it just to push the stock higher. There's a fine line in a lot of things in trading, guys. And when people are just saying, hey, this is why I'm buying it, this is the thesis behind it, it's no different to a hedge fund manager saying, hey, we're in this stock because we believe X, Y, Z. It's when people go over and they start making things up and they start doing this, that's when you're basically enticing other people to follow your trade based on false information, and that is when it becomes illegal. So all these situations you see with different types of stocks out there, you've got to kind of go in with your eyes open, understand what is happening, understand that in very rare circumstances is a stock going to be valued suddenly from 1 to 30 in a couple of days, unless there's a significant release from the company stating something like, hey, we've won a court case and that was looming on them, they're going to be bankrupt. Hey, we've got a rearrangement of our loan covenants. Hey, we suddenly won a big contract with this. Something official that's in that Oil Explorer, we just found loads of oil. Something that's company changing would have to happen for the stock to go from 1 to 30 and be sustainable. To actually sustain that level of growth from being something that's sitting in nothing to this. Now, there are exceptions, of course there are. We can think of things like when Tesla was starting to go up, they weren't making any money, but eventually the revenue caught up. A story, but these stocks tend to be, if it's on a stock that's literally never heard of, it's something that's dead and gone, it's very liquid, very small. These tend to be liquid stocks as well, the proper pump and dumps. Just be careful what you're trading. Go in with your eyes open, guys. It's the chimp thinking we're going to get quick riches and be able to get good profits quickly, entice you in, and not thinking about the consequences if the whole thing just collapses. All right, guys, take care. See you next one. Keep your risk managed. Bye bye.